Thank you for joining us at XM.com. In this preview video, we'll be looking at Eurozone inflation data out this week and how it might potentially affect the European Central Bank and the euro. I'm Christina Marujos. With me today is investment analyst Achilleas Georgolopoulos. Achilleas, the European Central Bank kept the door open to further hikes if needed at last week's meeting, at a time when growth across the Eurozone is losing steam. So could a strong CPI report solidify another rate hike?
Good morning, Christina. As you mentioned, the ECB hiked at the last meeting, but of course kept the door open for another move if needed. That's the big addition. With the ECB staff forecast that came with the September meeting, saw the headline inflation dropping to 2.1% in 2025. So one could say that the ECB is not there yet in terms of achieving its target of 2% inflation. However, most ECB doves, essentially people that want easier monetary policy, have come out aggressively, essentially commenting that we've done enough, we have to stop here and evaluate the situation. Similarly, the market does not expect another rate hike, so it has actually started pricing in rate cuts. And the reason is the weak economic growth outlook, as we saw at the latest PMI figures. However, President Lagarde and the other ECB hawks are trying to be a bit more cautious because they are worried that the recent oil price performance, and we've seen good increases in oil, could mean that the current, let's say, deceleration in inflation could be temporary. So they have kept the door open just in case they need to act at some stage. In this context, of course, we get the preliminary inflation figures for September from Germany on Thursday and the euro area aggregates on Friday. Both are expected to show significant slowdown, which is of course a positive result if it gets materialized for the ECB doves. Just to highlight, the headline euro area aggregate inflation is expected to drop to 4.5% increase year on year, and the core component, which gets lots of focus, is expected to show a 4.8% year-on-year growth. Now, the stage we have reached now, it's not so simple as we got used to the last 2 years. So an upside surprise on inflation does not mean that the ECB is going to hike at the next meeting. For the ECB to do such a move, they need to see positive figures on the growth outlook. They need to see wage developments, essentially second round effects of inflation, and of course they need to see oil staying there and creating a situation where inflation could gradually become stronger and stronger. On the flip side, the barrier for a rate cut is quite high at this stage. However, quite a few ECB members have started talking about it. If we get a confirmation of the market expectations for weaker inflation prints, or even if we get a downside surprise to those figures, then there will be more comments about rate hikes, essentially even during the fourth quarter of 2023.
I see. Now let's turn to the market reaction and look at the euro. How could the single currency perform this week?
The euro has been having a bad month bad 45 days against the US dollar. It has been on an aggressive downward trend if we check the euro-dollar chart. If we get an upside surprise on inflation on Thursday and Friday, then euro-dollar could stage a move towards the 1.0720. However, if we don't get stronger data over the next few days after the inflation release, then those gains might prove short-lived. On the other side, of course, we get weak inflation data, we get a downside surprise from inflation. That means that the downside move that started about 45 days ago will most likely continue, with the main target being the 1.0315.
Achilleas, thanks so much. This was a preview video. Thanks for watching at XM.com.